Let's connect with Prasenjit Basu, regional head and economist with Maybank, who joins us live from Singapore. PK, good morning. Thank you for joining us. This is Nikunj Dalmia from the Mumbai studio. PK, first a word on regional markets. Are you a bit surprised with the recent outperformance in Indian equities versus underperformance in the Chinese equities?
Not really. I think the Indian market had been sold off rather badly for quite some time. Valuations were looking a lot more attractive, and more importantly, there had been some positive moves on policy. In particular, I think there was a very well-targeted equivalent of a CRR cut by the RBI, which was targeted primarily at exporters, and that I think has helped to begin the turnaround. Now, I think going forward, the macroeconomic situation in India is not quite as dire as a lot of the commentary seems to suggest. I think we've just hit the trough in the January to March quarter, and from here things will begin to moderately improve, and consequently the market is beginning to reflect that.
Prasenjit, what about the economic data points and the GDP rate at that? Do you think it's a rate that we're currently staring at which is worrisome, or do you think that the structural factors are supporting the Indian GDP and they are still pretty much intact?
Well, I think 6.5% growth in the last fiscal year was a very poor number, but I don't think this fiscal year will be any worse. We'll have another year of 6.5% growth, with a better performance in the second half than in the first. Also, I think the last quarter was really the trough for quarterly growth. We'll see some better numbers in the April to June quarter, and a steady improvement from there onwards. There are some structural features that help India a great deal. Most important is the fact that the savings rate is still over 30% of GDP. And the investment to GDP ratio, despite all of this bad news, has moderated from about 39% at the peak to a little over 35% now. So that's still a very high level. It is higher than anything that India had until 5 years ago. So given that sort of situation, there is, I think, enough there structurally for the economy to grow closer to 8% in normal times. The fact that it is now likely to grow for a second year at just 6.5% means that inflationary conditions will gradually improve. I don't think they'll improve immediately because there was a major policy error made by the RBI in 2010, but it had corrected for that last year, and now we're seeing some of the lagged impact of that. Inflation, I think, is going to stay somewhat high for the next few months, but from about September, October, we should begin to see a very considerable moderation in inflation.
PK, but at a time when India is still running twin deficits, the investment cycle has broken down, Indian consumer is feeling rather exhausted or is confused. What makes you confident that the GDP data has bottomed out?
Well, Nikunj, you see, a few things. First of all, we've already started seeing a very sharp improvement in the trade balance. The latest trade balance for May was, in fact, the smallest trade deficit in about 13 months. Actually, that's for June. And that, coupled with the fact that you're likely to see the current account continue to improve, will help. Secondly, in terms of the industrial production, we've actually seen a modest improvement in May to 2.4% growth year on year. And I think that's the beginning. We've got the OECD composite leading indicator for India suggesting that you're going to see a steady acceleration from here. I think it's a reasonable leading indicator. Also, real interest rates are low. So at this point, they're really low enough to stimulate a much stronger recovery. So, although you're absolutely right, investment spending has been very weak for the past 12 to 15 months. I don't think it's going to get too much weaker. And despite the weakness of growth in investment spending, the actual level relative to GDP is still quite high.
Okay, flash from IMD that this year the July monsoon will be subpar. PK, think again when you are being bullish. Monsoons this year will be subpar. That's official now.
Yeah, well, I mean, subpar depends on whether it's more than 10% below normal. And also, a key with the monsoon is the distribution of rainfall across the monsoon period and across the country. So far this year, there's been 2 or 3 areas of the country that have been severely hit. But broadly speaking, the monsoon outcome so far isn't all that bad.
So Prasenjit, finally, what is it that you believe is likely to see sectoral outperformance or underperformance when it comes to Indian equities?
Well, I think initially Indian equities are likely to benefit from the extremely depreciated level of the rupee. I do think that the rupee is going to steadily recover from here. 57 was pretty much the bottom, and since then we've seen a modest recovery. There is further scope for it to recover. But even at these levels, at about 55, the rupee is extremely cheap. Exporters in India, therefore, are likely to outperform in the near term. In addition, on a slightly longer term view, I would say the material sector, capital goods, etc., will actually begin to see some benefit as well. But initially, I would really be focused on the export sectors, so software, pharmaceuticals, and engineering goods.